Good morning and welcome to my morning report analysis videos on Tuesday the 22nd of January with me, Richard Perry, market analyst at Hantec Markets. We've got a reasonably sort of risk negative look to markets today, not a huge move. You had this report out from the IMF yesterday which cut global growth expectations, citing potential risks coming further down the line from further Chinese slowdown and potential hard Brexit. But to be honest, it's not been a great deal of news flow other than that, which markets are really moving on. They're sort of waiting, I think, for further movement on the US-China negotiations. And at the moment, what we can see here is just a relatively mild risk aversion. You can see VIX volatility a shade higher. You can see Treasury yields coming off a touch as markets reopen again from the Martin Luther King Day yesterday, where there was no direction whatsoever. And subsequently, we've seen a slight amount of yen strength, outperformance from the yen across the majors. Also, gold a shade higher. As I said, Treasury yields slightly lower, and also equity markets all a touch lower as well. So a very slight amount of risk off, but nothing really doing in terms of direction overall. We've got some data points to look out for today. Initially, we're looking out for the UK unemployment numbers, which are expected to come in at 4.1% again, but also we're looking out for UK average earnings growth of 3.3%. So that's another interesting number that we need to watch out for, because that would suggest that real wages continue to grow, considering inflation continues to drop away to the 2% and below 2% level on CPI. That would suggest real wages are continuing to expand. We're also looking out for the German ZEW at 10 o'clock. Continues to remain in negative territory and fall away. Now, there is a correlation between the German ZEW and also German growth as well. So that's going to be an interesting number to watch there. At 3 o'clock this afternoon, we've supposedly got the existing home sales. Now, I don't know whether that's going to happen or not. We've seen previously where data points in the US have been delayed due to this government shutdown, so I'm not sure if that's going to happen, but supposedly going to be a negative move of 1.2% back to 5.25 million units. So that takes me to my chart of the day, which is silver. And silver, I focused on last week as silver was sort of breaking down below this. What is now, I'm taking as a bit of a sort of descending triangle, you could argue. A little top pattern descending triangle. And it's interesting that the line of that descending triangle, if you sort of project it lower from the formation of that triangle, actually comes back towards where we've just bounced from this morning. So there is obviously resistance overhead around that 1546 area of the breakdown. But I think a track towards 15 big figure support of the breakout between 1485 15 big figure, I think that could well be seen now as silver just retreats back a shade, and you can see that through the momentum indicators. RSI back to 50, MACD lines accelerating, stochastics negative configured. So yeah, this is an interesting move that we've got on silver, actually recovering intraday today on a prospective move. It's actually a shade higher by 0.6%. But is this just a rebound that gets sold into? Because I think silver certainly looks as though it's on a bit of a corrective track on a near-term basis. Yeah, back towards that that medium-term sort of breakout around $15, but still a near-term corrective move. There could be another couple of percent in that, back from 1530 where we see it at the moment. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.